Us right now is the chief investment strategist at Raymond James, Jeff Saut. Jeff, good to see you.
Pleasure.
Would you put new money to work in this market today after the gains we've seen?
Yeah. Our model telegraphed this before the election that said no matter who won, the market was staged to go up. And I had lunch with Larry Fink at BlackRock the other day at the CIO roundtable, and he said, this is the biggest honeymoon I've ever seen in my entire career, but my hunch is you stay with equities into the inauguration and then reality sets in.
Yeah, but when you say the market would have gone up regardless, I mean, the market is trading on real expectations of an economic plan that is going to move the needle on economic growth.
You bet.
Right. So, I mean, do you think earnings are going to go up?
I do. The bottom-up operating earnings from S&P are around 131 bucks. Every 1 percentage point drop in the corporate tax rate adds $1.31 to those bottom-up earnings. So even if you don't get to a 15% corporate tax rate, if you get to a 25% tax rate, it still adds $13.10 to that $131. You want to hold the PE constant at 17 times forward earnings, you're talking 24.50 on the S&P.
Yeah. Jeff, it's interesting. Some of your colleagues, CIO, are saying that it could get up to 20, that the Dow could reach 25,000. Where do you think?
Somebody came out yesterday and said it was 50,000.
When?
Yeah, well, that's a little bit of a stretch. But seriously, you think post-inaugural it'll take a dip? Or you think we'll continue this momentum?
I think you're going to be due for a pullback after the inauguration, but I think we're in a secular bull market, and I was on your show in March of '09 saying the market's bottomed this week.
That's right.
We're in a secular bull market. They tend to last
and that
14
was the bottom.
or 15 years. It was the
March
bottom.
of '09,
yeah.
Obviously, the next big fear is rising interest rates. Obviously, that would take a while to play out. But what are you seeing, Jeff, as far as participation in this record run-up in U.S. stocks? I mean, pre-election, the record run-up, we didn't see a lot of Main Street being able to participate in that. Are you seeing that tick up here?
No. The individual investor is AWOL. They think the only reason stocks are up is because the central banks have flooded the system with money. And what they don't get is that the equity markets don't care about the absolutes of good or bad. All the equity markets care about is, are things getting better or are things getting worse? And things are getting better.
But if longer-term interest rates keep going up and people start seeing actual losses in their treasury portfolios, does that force money out of bonds and into stocks?
It's not just out of bonds. You saw Norway 2 months ago, the white paper from Norway, the largest pension fund in the world, $880 billion. They were told to increase their exposure to equities from 60 to 70%. Not last weekend, but the weekend before. The Finnish pension fund said, we're taking our underweight in U.S. equities to a market weight, which means they got to increase their position by 20%.
I was talking more about individuals, that individuals kind of, if they see losses in what they consider to be the safest of investments.
You start getting those statements. You
start going, even in your 401k plan, you start reallocating your money.
Yeah, well, the Barclays Ag, I think, had its worst loss ever of 4% in the month of November. And you're starting to see the great rotation, yeah.
So quarter point or a half point increase in rates tomorrow?
I have been on your show for the past 10 months saying Janet Yellen's not going to increase rates till after the
You're not
election.
expecting a rate hike tomorrow?
I am.
Oh.
Quarter of a point.
Okay.
But I said not until after the election.
Okay.
Yeah. Hey, Jeff, tell me, a quarter point's already baked in, I'm sure, to the market. But if that continues, what does it do to the housing segment, which is really a job creation engine for us? When does it tip? And, you know, interest rates, the banks love it. People buying homes may not like it.
I think a quarter of a point is non-impactful.
Yeah, but where does it have to go before it does become impactful?
4%.
4%.
Yeah.
So that's what, 4 hikes in 17? I
don't think you'll see.
You don't think so, right? I mean,
I had lunch with Janet Yellen. I think she's going to be very.
So 2 hikes in 17? Something like that?
Yeah.
I want to go with you on lunch and dinner.
Exactly.
You got everybody at lunch and dinner. Where's our invitation?
So what is your thoughts on a Rex Tillerson Secretary of State pick by the president?
Donald Trump, and I didn't vote for either one of them. The first time in my adult life I didn't.
Did you not vote?
I voted all down ballot.
Okay.
But I couldn't bring myself to vote for either one of them. I think that the selections he has made are spectacular.
Wow. Yeah. But now you have a president-elect who you have individual stock risk, potentially from a president-elect, because he's tweeting
That's
about
fair.
Boeing and tweeting about
That's
Lockheed
fair.
Martin. So who's next? Who's next? Who do you have to worry? Which stocks do you have to worry about Donald Trump tweeting about?
I don't think you have to worry about any stocks. We're in a secular bull market. Everything's going higher, but the low vol stocks, which are way overpriced,
Yeah.
and utilities.
The low volatility stocks. All right,
His challenging on the waste in government is a good thing.
You
Yeah.
got that right.
Exactly. So your favorite sector right now? I mean, financials are up big. You like financials?
Raymond James stock has gone from 40 in February to 75.
So you're a happy guy then.
You bet.
Jeff, good to see you.
Always a pleasure.
Thank you so much. Jeff Saut, Raymond James there. Come